Hello, hello, hello. Happy Monday. I know it's the end of the day for the SoCal PPM team. Happy Monday.
Happy Monday, everybody.
Get excited. I'm excited. I'm excited because this is the first workshop in the Real Wealth Strategy series. And I have two amazing people that are joining. But I'm so excited, kicking off St. Patty's Day for those that celebrate St. Patty's Day. I got my green on. My shirt says whole mood. Anyone get the play on words? Ha ha ha.
Security.
I we gotta make it fun, right? We gotta make it fun. It was one of those days, and I was like, it's been like a manic Monday, and I was like, okay, I gotta, be festive. Like, what do I have that's green? And today was just crazy work day, and I saw this Whole Moods, and I was like, that's the one for me. Just it's been a crazy day today, but we're gonna end it on a good note. Let's see. Hello, hello, everyone. I'm gonna enable the chat right now. Let's see. Yeah, so that way we can chat with everyone. I've enabled the chat. And thank you so much for everyone that's joining us right now. Hello, hello, Joseph. Please tell us where you're tuning in from, how you heard about this. If you're a real estate owner, if you're thinking about getting into real estate, let us know a little bit about you. Awesome. And also let me know if you guys can hear me okay. Hello, hello, Chrissy. Nice to see you joined. Thank you, thank you. Okay. Jerry Reynoso from South Central, thank you so much for joining. Okay. Amanda from Escondido. All right. First time landlord of an ADU.
Okay.
Okay. Garage conversion. Nice,
80
nice.
better.
ADU men. I'm going to learn some real estate terms too tonight. So awesome, awesome. Okay, okay. Except people join us. But yes, please feel free to let us know where you're joining in from. Want to hear all about your real estate ventures. I'm going to go ahead and pull up the workshop. I hear see the SoCal team's a bit quiet today. Alicia and Odess, how are you guys doing today? How are you feeling?
Doing amazingly well myself.
Good to
St.
hear.
Patty's Day.
Right. I'm far removed from, going out and pretending I'm Irish just to get drunk.
Get drunk to get drunk sake. That's how you do it.
Awesome. Okay. Sorry, my old eyes pulling up the downloads right now. All right. We're going to go ahead and get started. But before we do, just give me one moment. I'm going to step away from my desk for 20 seconds. Be right back. All right, and I'm back. All right, I'm going to share my screen right now. You see my screen okay? Yes, perfect. All right. Alicia, Odess, can you guys see my screen okay?
Yes, ma'am.
All right, perfect. Let me go ahead and do the slideshow into full screen. All right. Well, thank you so much for everyone for joining today. My name is Elizabeth Cotton. I am the Executive Director of Black Tech Link. And welcome to Real Wealth Strategies. We're excited to have this as a workshop as a part of our small business workshop series and adding real estate discussion, education to be a part of this program. And I'm really excited to also partner with SoCal PPM. But before we jump to them, who will be presenting today, I wanted to share a little bit about Black Tech Link. Black Tech, and those for those that are maybe joining us for the first time. We're a Southern California-based nonprofit whose mission is to focus on the economic development of Black communities. And we do that through a number of programs. We have like youth education programs where we teach like STEM. We also do workforce development and we do small business development. And so this program is under that umbrella. It's called our Small Business Mastery Program, where we offer a lot of different workshops for whatever level of business you may be at. And then we also provide free consultation. So if you're interested in, talking with one of our consultants, some of the people that you see today are some of our consultants. They're willing to provide insight to help you grow your business and make it more sustainable. This program is also part of the State of California Governor's Office of Business and Economic Development, their SBTAP program, a Small Business Technical Assistance Program. It's a program funded through a grant from the Governor's Office, California Office of Small Business Advocate. This program offers support, consulting, and training services to small businesses, prospective small businesses, and nonprofits. It prioritizes initiatives aimed at assisting underserved businesses throughout the state. As a grant recipient of SBTAP, Black Tech Link, we developed the Small Business Mastery Program. And so we offer support services that focus on legal, that focus on real estate, fundraising, financing, exporting, like you name it, it's something that we can offer. We also specialize in tech startups. So if you are a tech startup, we're also willing to provide support for that. At this time, I'd like to introduce my collaborators in the SBTAP program. My team is on from SoCal PPM. We have Alicia Bramble and Odess Riley. Alicia, do you want to introduce yourself?
Sure. My name is Alicia Bramble. I'm a partner at SoCal Premier Property Management. I have been in real estate, property management, and affordable housing for about 19 years now. And Odess, myself, and another partner started SoCal Premier Property Management, where we're managing commercial properties. So retail, medical office, mixed use properties.
Awesome. Thank you so much. And tonight's speaker is Odess Riley. He is also one of the directors of PPM. And I feel like it's only right, Odess, you don't necessarily have to introduce yourself, but I will introduce yourself since you sent me like this beautiful bio. And I think it's only right that I like read all of your accomplishments, as you are an amazing individual. So Odess Riley Jr. Is director at SoCal PPM and real estate brokerage and lending firm in Inglewood, California, with nearly 15 years of real estate experience and over 125 million in closed transactions. Odess has an ever-expanding service portfolio from selling single-family homes, condominiums, and apartment buildings to real estate financing and commercial financing leasing. His greatest strength is building lasting relationships with his clients and providing highly personalized and customized services to meet his clients' specific needs and preferences. Odess launched his career real estate career while pursuing his BA in marketing and public relations from Columbia College in Chicago, Illinois. To help supplement his educational expenses, he purchased his first piece of property, 2 condominium units in Chicago, where he lived in one and rented the other. Upon graduation, Odess spent 10 years gaining corporate management experience, including his work as an executive manager for Walgreens. However, his longstanding love of real estate and finance drove him to make a drastic change, leading to his career in real estate. Odess is also one of the managers and mentors at USC. Is that correct? Was it real estate's?
No, the Real Estate Associates Program, that's not at USC. Real Estate Associates Program, REAP LA. I also sit on, I'm the treasurer for AREP LA, African Americans Real Estate Professionals, and the housing commissioner for the city of Inglewood and for the county of LA. But all that boring stuff aside, I'm here to hope we don't bore you tonight. I'm here with my amazing partner, Alicia, who honestly keeps SoCal PPM running. She's the brains behind the operation, keeps us functioning. I see you have the picture of me back when I used to get haircuts and wear suits on the PowerPoint.
Yeah, and I told her not to use that picture.
They're probably like, who's this guy with the glasses and the crazy hair?
That was pre-pandemic. That was pre-pandemic, right?
That was pre-pandemic. That was pre-pandemic. Oh, now you got this guy. All right, so I don't want to tech. I know everybody's on here at 6 o'clock or almost 6:30. People are probably finishing up work, have a lot of stuff to do. Hope we can give you a wealth of information, help you can help with those margins in your property management. So we're just here to be of service to you guys. So let's get the energy high. If there's questions, please feel free to get all your questions out there because we want you guys to leave with some information. So how are we getting this started, Liz?
Well, I think we've done the introduction already. And I also want to include, like, after the, presentation, we do a segment called Talkback, where we invite the attendees into the main call, and you can ask Odess and Alicia your real estate questions directly. So please stick around for that. But go ahead and get started.
All right, guys. So today we're here talking about property management, and how you can leverage property management to legally charge back costs, optimize business expenses, and just all the different things you can do with property management. So next slide, please. All right, so why business owners need property management. First thing, you want to reduce tax burdens and increase write-offs. If you are managing the property yourself, there's so many different things you're going to be missing because most people who are managing their own property, all they're going to do is go collect rent, pay the mortgage, pay whatever utilities they have to pay, and then you just move on with your day. When you're coming through a property management company, you're able to pay us, use that as a deduction because you're running a business. You also get everything that we're going to show you how to do from that property management. We're going to send over financials. So you're going to have the ability to look at how your water, your electricity, all your offsets, any and everything, how it can be taken down and deducted from your out-of-pocket cost. You want to legally offset property related costs. And when I say legally offset, you don't want to just make up stuff. A lot of times when we're dealing with owners, they're just guesstimating everything. They're going to say, well, I paid for the water heater on my house, and then I had the guy go check on the water heater at the property on blah, blah, blah street. And so I put a lot of the fees from mine onto that, and we just made it work because, it was a water heater. When in actuality, you could have written most of that off without worrying about your house. You could have charged for the fee of actually sending a person out. You can charge for the fee of how much the water heater costs, and you can deduct that from the taxes legally. You can use property management to increase your cash flow and long-term profitability. And the reason I say increase your cash flow is you may pay $200, $300, or $400 to a property manager. But what we're doing is we're making sure that every year you increase your rents. one big thing that a lot of owners don't do. You want to speak on that a little bit, Alicia? Because I know you were doing that from some of your owners recently.
Yes, so we're in California. I see we have people in a few different states, St. Louis. You always want to check your state laws, your local county and city laws on raising rents. But right now in California, we ultimately have kind of like a statewide rent control where you do have a limit to how much you can charge for rent. So usually that baseline is up to 10% right now. Give or take a few basis points. And so we generally try to raise the rents at lease renewal. Renew your tenant's lease for another 12-month period, and then you're able to increase the rents from there. We generally use that 10% as a rule of thumb. If you're going to increase the rents by more than 5%, you need to give your tenants at least 60-day notice. So you should start that lease renewal process probably 60 to 90 days ahead of time. If you're only going to increase it possibly by 5% or less, or you're not going to increase it at all and just renew the lease, then you should probably give your tenants 30-day notice.
And with that notice, you need to make sure whatever state or municipality you're in, what the exact rate of increase you can put, because we don't want to have you trying to increase it higher than you can, because we're talking about California specifically. So you want to reach out to whoever is in charge in St. Louis or whatever city or state you're in. Also, with that increase, the reason you want to always do your increases is because the city is not going to help you on the back end. Let's say you let somebody move in and they live there for 4 years and you don't do any rent increases. And then you have an issue with your property and you have to go fix a boiler or a roof or a foundation and it costs you a good sum of money. And then you say, hey, I'm going to need to increase my rents because, I had to spend a lot of money out of pocket. The problem is you're probably going to be capped at what you can raise your rent. And then you're going to be like, well, I cut you a deal for the last 4 or 5 years. I need to get it back now. And you're not going to be able to. So it's not that you're increasing your rent to be a bad person. It's you're increasing your rent to make sure that you can manage your property and keep up with inflation. So when something does happen, you have some money put in your cap X that you can use. You can take that money to pay down some of that issue you didn't think you were going to have. So a good rule of thumb when you're dealing with a property management company is we're always going to make sure those increases happen. Whereas when you're doing it by yourself, a lot of times you don't want to do it because you've built a relationship with the tenant. But at the end of the day, it's really a business and you want to make sure that you're doing the things that are going to keep your business viable. Anything else you would add to that, Alicia?
No.
All right. Next thing we're talking about is professionalized and real estate services, ownership, and operations. Like the reason you'll bring in a property management company or turn yourself into a property management company is so that you can have specific rules to your property. You always want to consult from the landlord tenant laws in whatever area you live. And you want to make sure you adhere to those laws because those laws are where your margins are and where your money's at. And you don't want to do anything that'll cost you, have you in court. You don't want to do anything that's going to have you create a safety violation, and you don't want to do anything that is going to make your property like tenants will move in and then feel like they own your property. And if you don't have any specific set rules, you'll have a long issue when you decide you either want to get rid of a tenant or you want to stand firm on an issue. Hey, if you wouldn't smoke cigarettes on the porch, I greatly appreciate it. And they'll be like, well, I've been smoking for 3 years. Why are you saying this now? Whereas if they were coming in and those rules were set in writing, black and white, and they were in your lease and in your contracts, then you wouldn't really have an argument. And if you do, you can point to where it's at and possibly take legal action or get rid of that tenant. Anything you'd add to that, Alicia?
No.
All right. Next slide, please.
Just really quickly, I have a quick question in the chat.
Go for it.
Does the notice of rent increase have to be disclosed in the original agreement?
No, I answered that. As long as you're giving sufficient notice according to the state and local laws. So like I said, in California, if you're increasing over 5%, you generally have to give a 60-day notice to the tenant. Less than 5%, it can be 30 days. as a rule of thumb, I usually just start my lease increases and my lease renewals at 90 days.
And that way everybody kind of knows what's coming. And if there's going to be any arguments, it's really moot.
And I'm sorry, that's 90 days before the expiration of the lease.
Mhm.
All right. Was that were there any other questions before we move to the next slide?
I know.
Okay. So whatever state or municipality you're in, you want to know specifically what you're dealing with when you're going into either start a property management company or hire a property management company. So us being in California, our property management companies are corporations. And there has to be a broker involved within that corporation for you to legally operate. You can't start a property management company, or you can't be the person who runs it if you're not a real estate professional. Because in California, you have to have trust accounts to keep people's money in to make sure that you're zeroing out accounts every month. So in some states and municipalities, you can use LLCs, but within California, you're between an S Corp and a C Corp, and that's really going to come down to what kind of structure and how you want to pay your taxes. You want to add anything to that, Alicia? That's a no. All right. You want to keep your business and personal finances 100% separated. A big issue that you run into when you're managing your own properties, or even with some of the smaller mom and pop property management companies, is something called commingling. And commingling is not a world you want to live in. Commingling is when you have a bank account with your owners or the property's money in it from the tenants, and then you mix in your own personal money or other business money, and it's hard for you to tell where one started and the other ended. In California, the reason we have our trust accounts is so we can zero out. You can't have more than essentially $200 in a bank account, in your trust account, at the end of the month and legally operate. We're supposed to zero it down and show where every dollar went, because as a property management company, it's not our money. It's the owner's money. So we need to make sure when that money comes into the account, we pay out the property management company. We pay out any vendors or fees or expenses that were accrued on the property. And then the remaining balance goes to the owner. Every month, that should be how it operates. And if you are putting your own money in there, or you're possibly you managing more than one property, you have Elizabeth's property and Alicia's property that you're managing, and you pay out and you don't have everything balanced, you end up paying Elizabeth her whole property management fee or all her distributions from the money that you think she collected, when a tenant hadn't actually paid, one of her tenants. Let's say she had a 4-unit. And now the money that you paid out her total distribution with was some of the money from Alicia's account, from her property. So now you didn't intentionally do anything wrong, but what you've done is illegally gave away Alicia's earnings to another owner, which can get you in deep, deep trouble. So these are things you want to be aware of. Even if you're an owner and you're managing your own properties, if you have 5 properties, the money for each property is supposed to pay out a certain way. You're not supposed to use one property to pay for the other, because you'll mess up all your accounting. Let's see. Listing a property management, listing a property management LLC to manage your own properties. If you're in California and you're managing your own properties, that's fine. You want to have a basic structure. At the end of this, if you have some questions, I can send you over some information on a basic structure. But if you're only managing your own properties and you want to run it in an LLC, you just want to make sure that you have a bookkeeper or somebody helping you balance it out, or you have the right software. If you're managing other people's property in California specifically, or New York, you definitely don't want to have an LLC. You want to have a corporation. Next. Charging back property management fees. Do you want to talk a little bit about this, Alicia?
Charging back property management fees. So Normally in California, property management fees are between 5 to 6% of the rent. In other states, that management fee is a little bit higher, only because rents are a little bit lower. All maintenance and repairs can be used as a write-off or being able to charge back to the property, as well as, you know, utility and property taxes, insurance and compliance costs. All of these can be done legally. And as Odess said, you need to use clean bookkeeping. So it's highly recommended to use some type of documentation system. For example, SoCal Premier uses Appfolio for our bookkeeping and our accounting and even our work orders system. We've used Yardi Breeze in the past. We've used Yardi in the past. And I've used Door Loop temporarily. Door Loop was a very good system to use as well. So you want to use those systems as good documentation. And those are items that can be charged back. I'm trying to think if there's something else on your list, Odess.
No, I mean, essentially,
You mean vacancy loss, right? Vacancy loss
correct.
can be charged back. Vacancy loss is a big one to be charged back.
Huge.
Yeah. Marketing costs can be charged back.
And even depreciation, you can depreciate your property over a certain amount of time. But the biggest one is vacancy. A lot of owners don't realize if there's nobody in that unit or a percentage of units that you own, you can get with your accountant or CPA, or if you do your own taxes, you can find out what percentage you're allowed to write off on a unit that's vacant. And that it can be very helpful at the end of the year when you're having your taxes, because you're earning income on a property, and anything that you can do to offset any of those losses can definitely help with the amount of money you have to pay to Uncle Sam. So big thing you always want to be looking at is making sure if you have empty property units that you're writing off or depreciating your vacancy. You want to make sure your utilities, you're keeping up really, really good numbers on your utilities. You really want to have control over your water and your electric to make sure that it's not something that you're paying for, because that can really eat away at your profits. And anywhere that you can have any write-off. Sometimes there's government programs for specific areas. You always want to check all these things, because essentially you're just leaving the faucet on and letting money drip out if you're not paying attention to these things. Let's see. What do we have on here? Fair market value pricing. How you legally know what you can rent your property for. There's not really a legal amount. You always want to go with what the market is going to allow, what the market will bear. When you're renting out your property, you want to make sure that you can run comps, or you can look at Redfin or Zillow or rent.com or whatever site that you use, see what properties are going for in your area, and then you use those as a barometer. If they look like your similar size, similar square footage, similar bedroom, bathroom count, and updates, then you use that as your barometer. During an emergency in America, we have something where you cannot legally go up in a crazy amount on your rental fees if there is a natural disaster. So in California, we had the fires, and people were hiking their rent. They were saying, oh, the house is renting for $3,000 a month. The fires happened, and then it was $7,000. That's called price gouging. So if there's a disaster, you want to make sure this is something that you're aware of. Even if a tenant or somebody trying to rent it offered you more, they could then possibly take you to court for charging them more than the right time at that time was legally allowed to do. Next slide. All right, before we get into this, are any questions on any of the things we've discussed so far? All right. Are we good, Elizabeth? If you're speaking, you're on mute.
Oh, sorry. I saw a question in the chat that says, someone said, so can you you can be property management to your own property?
You can definitely be property management to your own property. The biggest reason a lot of people don't manage their own properties, they just don't want the headache of having to talk to their tenants. They don't want the headache of keeping all the bookkeeping, and they don't want the headache of when somebody calls you on a Sunday at 8 p.m. to say my toilet's clogged. Um, a lot of mom and pops property managers out there manage all their properties for years. A lot of the properties we end up with are properties that were self-managed at one point. The owners have gotten older and decided they don't want to manage, or their kids take over and they don't want to do it. Um, it's a really not a, it's not rocket science. It's just a lot of customer service and a lot of logistics. Anything you want to add to that, Alicia?
No, that's spot on. We get a
Yeah.
lot of people that are ready to retire and they want to spend time with their families, so they no longer want to be involved in the day-to-day. And I think some people also realize that there's other strategies that can be deployed. So they would rather someone else, implement those strategies within their portfolio and save them a little bit of money and time ultimately.
All right. So we're going to get into tax advantages of property management. If you're bringing in a property manager and they are making sure that your property is getting financials every month, it allows you to have a really, really smooth ability to file your taxes, and you're able to depreciate certain things on the property. If you put an HVAC system in, if you put on the roof, if you put in new windows and you cut down on the sound or cut down on the winterization, these are things that can be depreciated over a certain amount of time. Um, you can do expense deductions on things that are property related. If you had to go pick up something yourself and drive it from really far and it costs a certain amount to have it installed, that's something that you can talk to your CPA or accountant about. Um, you can lower your taxable income. So some people will keep a unit vacant on purpose. I'm not saying it's something you always want to do, but if you have a bigger portfolio and you're having taxable issues and you're needing to have a lower income, but you can still make money off your property. I've had an owner who had a 30-unit apartment building who kept 6 of his units vacant just so he had the ability to write off every month that he was losing money on those units to balance out what he owed, because he had another property that was more profitable. He was using the one that was less profitable to help him offset his fees. Um, what you want to do, avoiding IRS red flags and compliance strategies. You do not want to get audited for doing something silly. You do not want to be taking rent payments in cash where you cannot prove that you received it or you didn't receive it. You always want to create paper trails on everything you're doing. If somebody's zelling you, you want to keep a log. If they're cash apping you, you want to keep a log. If it's a money order, you want to give them a receipt. You never want to accept cash. I'm not telling you you can't, but I'm saying you might get audited and then it's up to you to prove where, who, what, when, where, why that money went, how it went, and how much you were paid. If a tenant's saying they were paying you $1,000 a month and you're writing down 700 and you don't have a receipt, how are you going to prove? It's on you. The burden of proof is on you. And as a business owner, they're not going to go after the tenant. They're going to go after the business owner because they get taxes from us, not from tenants. Anything you want to add to that, Alicia?
No.
Okay. All right. So you want to make sure the biggest thing you can be doing is really having your paperwork in order. It really seems like I'm harping on it and like it's such a boring thing to talk about, but paperwork, paperwork, paperwork in your property management. You want to make sure your leases are all ironclad. You want to make sure you're giving receipts for everything. Anytime you have a third-party vendor do any work on your property, you want to get a quote on it. You want to have an invoice. You want to have a receipt for the payment. You want to put all those things together, put them in a file, scan them into your computer so that when it's time to file your taxes, everything is right there. Because real estate's expensive. You'll say, I spent $20,000 on a roof, $7,000 on foundation, $4,000 on a boiler, and $2,000 to upgrade our electrical panel. And now it's on you to prove that you spent all this money on these things. And if you haven't kept your receipts right and you were getting a homie hookup on something, now you're writing it off. It looks like you're writing off $30,000, $40,000 worth of stuff. You're getting audited by the IRS. You don't have everything in order. That contractor's not going to want to come back and tell him that, oh yeah, he only paid me 15,000 for the roof, because you don't know what he's doing with his taxes, he or she's doing with their taxes. So you want to make sure that you're creating a paper trail of everything you're doing. Next slide, list. So we have on here, we're talking about a case study for a successful residential to commercial exchange. How a business owner can purchase an office building and lease it back to their company. If you have a business and you are paying you're paying rent. Like right now, I'm in my office. SoCal PPM, we pay rent. And we are able to write off a certain amount because, this is a part of our business expense. But if we were to buy this building like we're working on, we can actually own the building, pay our regular taxes and everything else, but we can then pay our own company rent and write that off against the property that we own. And so many owners don't understand that. So in the building that I'm in right now, it's 8 units. We could have the ability to have other people paying a majority of the mortgage for us, and then pay our business pays a percentage itself, so that every dollar that we're putting into our own property to pay the mortgage is also going as a write-off too, because it's a business expense of us having somewhere to operate our business from. Has anybody got questions on that before I move on? Because that's something a lot of people are not clear on. If you're operating a business from your own property, the best thing to do is not pay the mortgage directly, but to write a lease to your company and have your company paying rent to have something to write off. Okay, guess not. All right, well, it's pretty simple. What is that question, Elizabeth? Looks like we got a few questions.
Yeah, just someone asked if we'll make the workshop available. Yes. So we will send this out. Um, so that was the only question. And then someone
Oh,
said,
can you
can
say
you,
it again? Okay, so in plain English is, let's say you're running a lash shop, you do eyelashes or nails, a salon, all right? And you bought the salon, you bought the place for $400,000, and you have a monthly debt service or mortgage payment of $2,000. You then say, okay, I have a $2,000 mortgage payment. I'm gonna do lashes, nails, and everything, and I'm gonna pay that every month. That's fine. You have something, a mortgage or debt service that you're paying off. Or you can say, I'm going to lease this property that I own to my salon. I'm going to write a contract. I'm going to make sure it's legally binding, that everything is in order. And then I'm going to rent that property to the fair market value. So if the fair market value as a rental was $800 to $900 a month, you're going to pay $800 or $900 a month to your company, and then have every month, all 12 months of those payments at the end of the year, those now go towards you being able to write that expense off from your business, as well as now you also have the property as the owner that is able to be written off as the mortgage and the debt service. So it's not double dipping, because they're two separate things. One pot is the ownership that you're paying down the mortgage on or the debt service, and the other one is the business side where you're writing off the expense of being able to do business. Looks like there's some other stuff going on in chat, Liz? What's going on?
Yeah. So Paulette asked, so if you own your own home, you can lease it to yourself, the
Your
business?
own home is a little different. Your own home is not a primary business. Were you going to say something, Alicia?
No, I'm agreeing.
Oh, okay. Your own home is different. What you can do is you can write off a percentage. You have to find out from an accountant or a CPA what percentage of your property you can write off. So let's say you have a 3-bedroom home and you're married and you have one kid, but you have another room that is empty and you work from that room and you use it as a business. That space, you can see how many square feet that is, and then you
Mm.
have to go find out what the exact deduction is in your state. You can write that amount of percentage off as a business expense, and that can be a deduction on your taxes. But it can't be the whole
And
house unless the whole house is 100% business,
Right.
because that room that you're writing off should be just for business.
mhm. In the chat, like someone asked about a tax advisor that specializes in that, and I put Patricia Hogger. She's a really great tax advisor, and I actually came to her with that question because I work from home, and she was able to provide that like rule of thumb for home-based businesses and things like that.
Correct.
Um,
I don't give the exacts on those because I am not a tax professional, but I'll give you the concept, and then you should reach out to a professional and ask.
let's see. What's the difference between a chargeback and a write-off, or are those terms used interchangeably?
A charge, they're essentially interchangeable.
Yeah.
Um, yeah, go ahead.
A chargeback could possibly just be something that you're referring to for the property. The property financials, you're charging something back. Either that trying to think of an example of a chargeback. What's an example of a chargeback, Odess?
A chargeback is, let's say you had an issue with what you
Oh, like
had
you're
when,
charging back the tenant. Okay,
yeah,
so yeah, like the tenant did some type of damage or something, or you're charging them back for utilities. You pay the utilities and then the tenant pays you back. So that's considered a chargeback. So that's usually a term that you're using when you're actually doing property financials. But a write-off is when you're doing your taxes.
correct.
So, all pretty much all the expenses that you're using on the property are considered a write-off.
Yeah. Chargeback, we just had a tenant broke a window. Her kid broke the window. She didn't have the money to pay it immediately. We paid for it, and then we added that fee to her monthly payment and percentage, and then we charged all of that back before, I think within the 4 months by charging her like $50 a month or something like that.
They got it.
Got it. All right. What else we got on here? How many more slides we got?
Let's see. Next slide.
All right. This one right here, boy, this will save you a lot of money and time. A lot of old school property managers use Excel or they use a couple of notebooks to keep up with everything. And that's cool. And if that's what you like to do, more power to you. But for a couple of dollars, if you're making good money and you want to spend a couple of dollars to make your life a lot easier, Alicia was talking about some of the different softwares earlier, Appfolio, Buildium, Door Loop, Yardi. They will make your life so much easier. Um, they put everything in a centralized place. You can have what tenant issues in there. You can have payments, finances, everything in a CRM right at a touch of a fingertips. You can hit enter and see all the information that you've entered. I mean, you have to make sure you're putting the information in there correctly, but it makes your life so much easier. That and having QuickBooks for your accounting, so you can, if you're turning a unit and you have to rehab it, you go to Home Depot, you can scan all your receipts in there, you know exactly what you spent. When it's time to go to the accountant and IRS time or tax time, everything is in one place. You can easily roll it out. What else we have on here? Um, Team clients. Uh, it depends on how you want to communicate with your clients. A lot of people, I bought my first property while I was in college. I wish there was Slack back then. I wish there was another way. They would wait for me to come home from work and catch me by the mailbox and want to have a long conversation with me. Um, I would advise the one big thing you don't want to do is spend a bunch of time talking to your clients verbally. If you have Slack or a text or a chat or something that you can keep it in there, what it does is it gives you a timestamp and it also gives the information of what they asked for, what you said you were going to provide, when you said you were going to provide it. Verbal communication in property management is the biggest no-no that you're ever going to have to deal with. Would you like to add anything to that, Alicia?
I actually would do the complete opposite. I mean, I do a lot of email communication. I would never probably use Slack with my clients. I do a lot of email documentation. I do have out-of-state clients that we text. Sometimes our time zones are different. But the communication is that we do with Slack and Nextiva is between our teams. Nextiva is our phone system. It's a really good documentation system for our phone calls and text messages between tenants, prospective tenants, and then some clients too. But usually what I do is I am a very transparent property manager. So I send out monthly financials to my clients. We send out monthly financials to our clients, but I also do a property report. And so we try to document along the way what's happened within that month time span. Photos, incidents, work orders. We try to capture all of that information along with invoices and the accounting financials. And that way there are no questions as to what's going on with my property. I haven't heard from you all month. What's going on? That's generally how I take any guesswork out of what's going on with my property. Odess is right. Phone conversations should probably be less between client and property manager, but there's still a way to communicate, document what's happened, and then a plan going forward.
Yeah. Anything that's not in writing in court didn't happen. And it may not be right. The person may have said something to you and you believe them, they shook your hand, but if there's no writing and there's no person to corroborate it, it didn't happen. So make sure, especially if you're managing other people's properties or you're getting a property manager, that you're looking into how they document information, because it's nothing worse than having to do an unlawful detainer or an eviction, and then you realize the property management company doesn't have all their ducks in a row. Now you're in court kind of just flapping in the wind trying to figure out what your next move is. Mm. Lastly on here, legal and compliance. Find a good lawyer, whatever area you live in, who does evictions and has a good understanding of real estate. And they may be a little bit more expensive, but they will save you so much time and energy in the long run. So you always want to make sure you have a good legal team that you can reach out to. And as far as compliance, you want to make sure that however you're structuring your company, you structure it right starting off so that whatever issues that you could run into, they're easy to backtrack and go through and fix. You want to add anything to that, Lacey? I know you love compliance.
I just love staying out of trouble in the courtroom. So that's probably why I like legal and compliance. I do like to look up the laws annually. They do change in California. Our laws are always changing. And so you do have to really be in the know of what's going on with the laws. California has become a very tenant-friendly state, so you definitely need to know what the rights are as a tenant and what the rights are as a landlord. One place I really like to go to is KTS. They're a law firm based in California, but I think they work in most states. It's Kimball, Tyree, and St. John. Now, to get legal advice from them is going to be extremely expensive. But they do publish almost like a book every year. And I send it to Odess every year too. They publish a book with the updated laws, and all things property management in a summary, and then references to the particular law that you should reference, you should be looking at. And that's been a major tool for for our business, because we know what to expect in the coming year. And we know what we can and cannot do as property managers and landlords.
And then KTS, we use Dennis Block here occasionally in this office.
You know, the
Um,
industry does not like Dennis Block. I can just
I
tell
don't
you.
care who they like. I need him to get it done. Get them people.
Nobody likes him.
I don't like him, but you know what? He gets that unit empty and the rent's coming back in. But I agree. But you got to find somebody who works best for you because we've had a attorney that was really personable, but they were very slow at getting back to us, and so we had to move away from them. So you just got to find a person who works best for you. But KTS, Dennis Block, and then like everything else, you can look into Yelp or you can ask other. If you go to a property management association, if you are a property manager, you go into AOA or something like that, and they'll have a list of people to refer you to. All right. So one of the big things you can do is start to scale your
Oh,
business.
Odess, can I
Go ahead.
mention one more thing?
Go for it.
Fair housing laws. You probably should take a fair housing course, and Kimball, Tyree, and St. John offer one. I want to say it's maybe 35, maybe $50. But fair housing laws are always changing as well. The protected classes and characteristics are always changing. So you may want to just invest some time and, $35 or $40 and take that course, so that you possibly don't say the wrong thing to your tenant, possibly don't put the wrong thing in your lease, especially when you're referring to the protected classes, and it could possibly save you, a lawsuit or litigation in the future.
Stay out of court.
Mhm.
What were you going to say, Liz?
Oh, nothing. I was just saying that's really good advice. Thank you.
Oh, all right. So now we're going to get into one of my favorite things, talking about scaling your business with property management. So a lot of people will have some extra money, and first thing they'll think about doing is paying off debt or buying something that they really wanted. One of the big things I try to say, especially if they're refinancing a home, one of the things I've always been a big proponent of is if you're going to take a lot of money out of your house or the property that you live in, you think about putting that into another property, not so much so that you just have an investment, but so that you can still do the thing that you were trying to do. I had a client who had a good amount of money, and their goal was to start a business. And they were like, I'm just going to use this money to fund the business. And we were like, well, smarter thing to do is since you have this larger chunk of money is why don't you take that refinance money, buy this 4-unit property. The 4-unit property was actually kicking off enough money every month for them to be able to run the business that they wanted to run because it actually had a good enough cash flow. So if you have money and you have money in a property that you already have, you don't take it off to pay bills. You take it off to get another asset that's going to generate income, and then you use that generated income to pay those bills down. It is the way that you can really grow a lot faster, and it makes you asset rich. And worst case scenario, things aren't going the way you want, you can sell the property. So it allows for you to kind of protect yourself. You just need to make sure that you're picking up a property that cash flows and doesn't have a lot of issues. Um, you can expand into managing other properties. If you have one property under management or you have your own properties under management and people think you're pretty good at it and you scale your business the right way, you can put it together and your neighbor might need management on their retail property or something else. You can say, hey, I actually have everything in place to manage your property. And you can, without even having to do a lot of extra work, especially if it falls within your radius, you can be making money off of your neighbors and friends and family by taking over properties that they already have. Um, syndication, and investment growth. When you're looking to do investment and you don't have all the money yourself, you can put together a kitchen cabinet or a group of friends and family. Everybody has a few dollars. You syndicate, you bring all that money together to have the down payment to get the property. You take that team, you all manage that property, you make the profits off of it, and then you can roll the money, the profits into another property possible. And now you have a group of investors, your own personal group, that you can pick up properties with, and everybody can start to grow. Let's see. And then one of the biggest things that we've really been trying to teach people over the last 10 years is you have a small portfolio of residential properties, that has duplexes, single family homes, triplexes, fourplexes, maybe an apartment building with 10 or 5 units. You can take a property, instead of always buying smaller units, you might say, I have 4 houses and they're worth X. I'd like to get into, but they're a headache, so I'm just going to sell them. We may say, instead of selling those, why don't you take all the properties, the 4 houses, the value of those houses is a down payment or 20 to 25% of a 20-unit apartment building. You buy the apartment building, bring in a property management company, and that apartment building is cash flowing so much more than the 4 houses, and you don't have any of the work because you brought in a property management company. Or you could even buy a triple net property, a property like a strip mall that has a Wells Fargo or a Walgreens or a Chase on it. You buy that property, you don't have to do anything. The Chase pays all the bills every month. All you do is essentially collect the check and make sure that you have a good attorney or a good real estate professional in your life to make sure when that lease comes up that you have somebody who can go over the lease to make sure that you get another extension or another 5-year option so that those companies are staying longer. There's different ways to skin a cat when it comes to going from residential to commercial, but it's one of the things people really should pay attention to, because you can make so much more money going into the commercial side with a quarter of the work. And it's easier to evict a business than it is a tenant. Just an FYI. Next, Liz. All right, so I guess this is the end. Next time we have Alicia on here and not just my ugly mug. And are there any questions for you guys, from you guys?
Yeah, so at this time I'm going to, thank you so much firstly for that amazing workshop. And I'm excited that that workshop literally like kicked off the real wealth strategies. I think people were engaged and you gave a lot of good information, and I'm excited for what's to come. And then our just, also our next workshop will be this Thursday. I know there's a couple questions about syndication. Our next workshop will focus on syndication with friends and family. So I'm excited for that workshop. Again, Odess and Alicia, thank you so much for your expertise. At this time, I would like to bring everyone into the call, and you guys can ask your questions directly to Odess and Alicia. Give me one moment.
I saw something about a property, a turnkey property.
You want to read that question, Liz?
Let me see. Eyes, my old eyes. Can I do it 103, a 1031 exchange when selling the 4 houses?
You can. So if you sell the 4 houses, you can sell all of them for the 100% value they are and roll that into a new property. Or you can, let's say the 4 properties combined, let's say they were 250,000 each, that's $1 million. Instead of taking $1 million, you take 800,000 and put that into a property. Then you have 200,000. You're going to get hit with taxable income on that 200,000. But if you wanted to take some cash out, that would allow you to have some cash on hand as well.
There's one other question above that, Liz, if you are investing.
Can you read that one for me? I'm sorry.
If you are investing in a turnkey type property, management aside, how important is your actual property ownership when applying for business financing?
I'm not sure what you mean about business financing.
Some
If you can
background.
ask,
And
go
this,
ahead.
yeah, it might be a little off topic, but my question is, and I'm new into the property ownership and management and all of the things above. So I'm learning. I'm really green. But my question is if I'm looking to finance, whether it's a group financing, investment property, or if it's an individual, when I'm looking to apply for the actual business loan, does it matter what my history is as a property owner slash manager if it's a turnkey property? Does that
So,
make sense?
let me see if I get it. So, you're trying to buy a property and a business name, is what you're saying?
Correct.
All right. So, this is, I hate to be this guy because I come from a finance background. And so I feel like sometimes people think I'm being too tough. The likelihood of getting a business loan to buy a property, if that business has not been generating a high income for at least 3 years, is very low. Because any lender is going to be looking for you to have 3 years of taxes to show that you can sustain this property. So what a lot of people actually do if they're buying out of state and they're buying smaller properties is they're getting a line of credit to buy the property, not
Mm,
specifically buying it with a loan for the property. So
right.
when you see
Not
people
secured by the
saying,
property. I see.
correct, correct. It's very hard because the bank is in the business of making money off of interest. They
Of
also
course.
want to make sure that you can manage something that has that high value to it. And a lot of people who are just starting a business, so you would have people who will be like, "Oh, I'll get you a shelf corp. You're gonna have this business. It has like 20 years of history, but it doesn't have 20 years of taxes."
Okay. That makes sense. And so what you're saying is if it has more than 3 years of established business and I'm investing into purchasing the business from someone, then that would be sufficient enough for the business loan. Is that correct?
If that business can show that it kicks off enough cash to
Yeah.
sustain that purchase.
Yeah.
So
Okay.
you have to be strategic because we're in the
Mhm.
process, of doing the same thing. You have to be very
Sure.
strategic in what you're writing off and how much you're making either at the end of the month or at the end of the year. So if you're writing every single thing off and you're showing the business as a negative, then it's not favorable to the banks or to the lenders.
Sure. Got it. But and I
And
guess just to kind of
go ahead.
circle back and sorry not to dwell on this question, but to make sure my personal experience and my resume has nothing to do with the business loan, as long as the business is operating and has like you said, a profitable statement, right? That
I
have
mean,
my personal finance and my personal background. I mean, I know there's minimum
Yes,
qualifications for
your
business
personal.
loans and things like that.
Yeah, they're gonna check your personal
they're
credit
still
and
going to know at least
Sure.
1 year of your taxes. So what
yeah,
happened, and this is just me, full transparency, the pandemic changed everything. Everybody got on Instagram, YouTube, Facebook, TikTok, whatever, and started giving information on how you can use business credit to get into real estate. And what it did is it made a lot of the lenders take notice because people were defaulting on all the loans. And then they tightened it up for
they
the
didn't
people
have a real business.
because they didn't have real businesses. And so
Right.
now the people who have real businesses are stuck to show a lot more information than they had to originally. When I started my first business, I was able to get all of our American Express, all of our loans, everything is 100% in the name of our business. The business me and Alicia and my business partner James have right now, we generate more income than that business, but because of the new laws and all the scrutiny, we have a harder time getting credit for this business that generates a lot more income than I did back then for a business that generated just a little bit.
Got it. Thank you.
And that's not to discourage you.
Sure.
I'm here to
I
answer
appreciate you
questions.
being real. Yeah.
Yeah.
Yeah,
And
it's at least a year of planning, right? And once they
Right.
see, even if they see a gradual increase in business income and then your personal income, personal credit, once they see a combination of that, then you're a viable candidate for a loan.
Makes sense. Thank you.
Yes, sir. One big thing you can do is either syndicate, like I talked about, where you bring other people in, or if you find a deal that's so good, there are private investors out there that if you bring a good deal, somebody will invest with you. It just has to be a good deal.
Makes sense.
All right.
Good question from Chrissy Barfield.
Mhm.
No, I don't think I have a question. I don't think I put a question in there, did I?
Oh, you raised your hand.
Oh, Lord, where's, so sorry, so
No
sorry.
problem.
Did I take it down?
Yes.
Yeah.
Okay, thank you.
Any other questions?
Someone asked, will next week focus on syndication? Actually, this week we'll focus on syndication. This Thursday we're gonna do syndication with friends and family the same time, 6 p.m. And I'll go ahead and send out the invite to that later this week. But you can also go on our website, blacktechlink.org, and check out our calendar of events. We have all of our real wealth strategies workshops on there taking place this month. And then thank you. And then also, if you want to check out our small business mastery program page, and you can schedule time to chat with like myself or another consultant. Just, fill out the form. And then if you have questions about real estate, it'll automatically shoot over to Odess and Alicia or
Yep.
one of the team members at SoCal PPM.
I'll talk about how I took a group of people together and we pulled our money in and bought a building in LA for about $1.2 million and all the headaches that went along with it.
No, that's what Thursday's workshop is.
Yes. How not
Oh,
to
you
get that
can talk
headache.
about that one?
Yeah, that's the perfect white paper, the whole headache. You see, I didn't have any gray hair before that property.
And then I also see Paulette Graham raised her hand. Paulette.
Okay. So I think I probably need to schedule an appointment to talk about this, but I work full time, but I've owned like a duplex, a triplex prior to the current duplex that I own. I also have like an ADU and another one that I just got built. But it probably my question pertains to like more tax related. But so this year I actually filed for an LLC or try to, create a business. But I've been just doing my taxes just under my personal social security. So I am probably haven't been getting enough write-offs or whatever because I keep owing, taxes, and I'm probably gonna owe a lot more this year. But so I can't like go back and like do my taxes under my LLC
You
because I
can't do
just
them under your LLC, but you might be able to go and at least recapture maybe a year if you go to a accountant and have them put together a tax strategy. You seem like you already understand the real estate side, how to get the properties. Now you just have to get to the side of how to, it's not how much money you make, it's how much money you keep. And
yeah,
sometimes we don't want to pay an accountant because it seems like it's a big chunk of money, but they save us so much more money that it actually is worth it.
yeah. I mean I've always paid an accountant. I think sometimes that my last accountant really didn't quite understand my situation
Yeah.
because she hasn't been my accountant before.
Mhm.
So, it's just like finding the right combination of like how much to pay the accountant and, and how much they know about like my situation because, I've gone through like a lot of people where someone many years ago told me that, some crazy stuff that didn't pan out and just kind of left me hanging. So, I mean, I could owe a lot of taxes if I'm not careful, and I don't want to be in that situation because then it leaves me like really not having any cash flow.
Yeah, you
So,
want a CPA who actually real estate is their thing.
yeah,
Because just because you're an accountant, all accountants are not created equal. And you
true.
want somebody who knows specifically what you're trying to do, not just taxes, because somebody
Yeah,
who just is a professional in real estate is going to have all the different loopholes and all the different tax codes that are going to be a benefit to you, not just getting your taxes filed.
Yeah, so I need somebody just to help me with like creating the business of real estate, because my goal is to like retire from my current W-2 and still make enough money where I could, still kind of maintain the kind of lifestyle that I want to maintain even better.
100%.
Yeah. Yeah, thank you. This is really, really awesome. I'm not even sure how I found you guys, but I appreciate all that you're doing here. This is very helpful.
Well, you're glad you're on. If you get your information over to Elizabeth, we'll give you a couple of names and then you choose from it, but there'll be people who are in specifically in real estate, and CPAs are in real estate.
Thank you so much.
Our pleasure.
Awesome. I also see Angela Romias.
Yes. Hi, can you hear me okay?
Yes, ma'am.
You can.
Hi. Okay, I'm a little nervous, so just bear with me.
Don't be nervous. Is it
but-
Angela or Angela?
It's Angela. It's just spelled with an I.
Okay, just I want to make sure. I'm Odess, so I try to pronounce people's name right. All right.
Same. I understand. Thank you.
Mhm.
So, first of all, I just wanted to thank both you and Alicia for giving your time today on this topic, because it's actually a topic I've had in my mind. So when I saw it, I was like, oh gosh, I gotta register for this, but I ended up showing up a little late, so I missed the about 20 minutes of your talk. But so I'm looking forward to the slides and the recording. Elizabeth, thank you so much for sharing that with us. I purchased my home in like 2018-ish, and then also in parallel created my LLC, because at the time I thought I was trying to set myself up to purchase with the LLC. That didn't necessarily happen, but I have them both sort of separately. And in the course of just having this property, and navigating all of the fun things that go along with it, I feel like I am a property manager now, right? I have a full-time job that's totally unrelated to this. And so I had been talking with a friend of mine about, is there, how could I turn that or leverage that into an actual business? And so this topic is really connecting with me. And so my question is, and I think you guys do, I hope you do, do you do anything like help folks develop their property management business strategy or group coaching or anything along those lines that can take some folks like me who kind of haphazardly have become a property manager by default, just because I have to manage my property, to help us, I don't know, figure out a real plan.
Okay, so we're not in business of selling people courses and stuff, but if there's something you're just trying to get your stuff set up for yourself, get Elizabeth will get your information, and then you email me and I'll give you the basics so you can get started and then point you in the right direction of some of the stuff you need.
Okay. All right. That sounds good. Thank you. This is super helpful.
Yeah, I don't want to BS you and be like, yeah, we got this amazing, because that's not really what we do. But I have no problem with somebody who's just trying to run their own business, giving them some advice, because a lot of people have given us advice over the years.
Okay. Thank you. Much appreciated.
And through the SB TAP program, which this is funded by, the team at SoCal PPM does provide a free consultation. And so I do encourage you guys to reach out to them. Again, I did put our Calendly link in the chat where you guys can schedule time and meet with myself, Odess, Alicia, or their business partner, James Doherty, to discuss like your real estate needs. And then let's see.
Heard you about to ask a question?
Myself, no. And then Paula asks, can those meetings be in person? If you are based in South Los Angeles, you can feel free to buy the SoCal Premium office, which is in Inglewood. I feel like I was echoing from the mic.
Yeah, that's fine. You just get the information from us. What is going on?
Hello? Is that better?
Hi.
Okay.
Yeah.
Yeah. So yeah, you can definitely connect with, myself. I don't know if Alicia and Odess, if you want to put your emails in the chat, you can. But you can also, I think the best option is just to schedule some time on a Calendly link that I shared. You can also go to the Black Tech Link website and go to our Small Business Mastery program. There's a little link that says talk to an expert, and we can get you directed over to someone from the SoCal PPM team, or depending on what type of needs, we have other consultants in our network that provide support. Awesome. I saw Alicia put her information in the chat. Well, I was checking if we still have a little bit more time. Was there any more questions?
I'm gonna go home, watch the Lakers, and play with my son.
Sounds like a plan. Awesome. Well, again, thank you so much. Alicia, did you have any final words? No. Cool. And they will be back this Thursday. And so if you missed this workshop, we'll make the recording available. And I appreciate all of our partners also that shared this event, because I know a lot of people may have not necessarily attended a Black Tech Link or even heard of Black Tech Link before. So we appreciate our community-based organizational partners for sharing our event widely, and look forward to growing this initiative. And thank you so much for everyone for joining today. And until next time, have a great St. Patty's Day.
Yay, thank you.
Good night, everybody. Have a wonderful night. Safe travels if you're driving.
Mm-hmm.
You go,